Today we are talking about the ADX indicator, which is maybe one of the most important indicators and tools that will help you to really master trend trading and get a much deeper understanding of momentum, trend analysis, and how to pick up those little clues on the charts that can really make the difference between winning and losing trades. So now first I will show you how to set your charts up the right way. Then I'm going to help you understand and master the indicator, and then we're going to take a look at how to use it in our trading to make better trading decisions. I'm using TradingView, as you can see, and here it's very simple and there's a very cool indicator for the ADX. So we go to indicators here, and then instead of typing ADX, we do DMI, and this is also the ADX, but there are some really cool benefits to this. So we click on it, and then you see we have something like that. What does this actually mean? So we have three lines. The red line in this case is the true ADX, and the blue and the orange line are the so-called DI plus and the DI minus lines. And the ADX is just basically a combination of the two lines. So what we'll do in the beginning to just get a better understanding is open the settings, and then you can see it here. Red is the DI, and what I will do is I change first the colors, and the DI plus shows and analyzes the bullishness of the market, so it makes sense to change it to green, and the DI minus is the bearishness, so we change it to red. And in the beginning, what we will do is we will first hide the ADX, because the ADX, as I said, is nothing but the combination of the two. So we'll get rid of this for now, and then we'll really get a good understanding of what this is. Also, what is really helpful is instead of looking at a line graph in the beginning, we go to the cross and here as well. So now we see the exact value. Also, the default setting, as you can see, is 14 period. So ADX looks at the last 14 candles, which is good when it comes to making trading decisions. But in the first step now, when it just comes to understanding the ADX, it can be much easier if we change this to 2. So the ADX only looks at the last 2 candles, and this will immediately help us understand what the ADX is actually doing. So we will get back to the default settings in a moment, but this is a very good start for learning the ADX and understanding it. And now you can see we have green and red crosses, and the DI plus analyzes the bullishness and the DI minus analyzes the bearishness, which is really interesting when we look at it. And what the indicator is really doing is it's looking at the high and the low of a candle in comparison to the candle before that. So what does that mean? And especially now, since we have it changed to 2 periods, it only looks at the last 2 candles, whereas when we change it to 14, it means it looks at the last 14 candles. So it's very simple now to understand. Let's look at this candle, for example. We have the high here and we have the low here. And the candle before that, you can see the high is obviously here, and the low is here of that candle, right? So this candle, the high and the low, is higher than the previous candle high and also the previous candle low. So you can see we have an ADX of 73. You'll see it here when I hover over the cross on the right. You can see here. So 73.47, something like that. So it's a very bullish candlestick, right? All right, that's good to know, because it shows us this is indeed a very strong bullish candlestick, because the high is higher, so we're closing higher, and also the low is higher, so the market did not retrace back below the low. If the market would have retraced below the low, that's not a super bullish sign. So ideally, you would like to see the market make higher highs and higher lows in a bullish market, right? Good. So we have a good understanding. And also you can see there's almost no bearishness, very small bearish reading. So you can see here we have 0.6. So very little bearishness here in this market, right? So let's look at this candle. Here you can see it's a red candle, and the low is lower than the previous candle, and the high is also lower than the previous high. So what does this mean? It means that we have a very bearish candle, 58 bearish reading. And you can see we have a bullish reading of 1.96. It's not super strong like the one here before, because you can see we did have a lot of retracement and the body is quite high, and it's not super large body, so the close is not very close to the low, but it's overall a very bearish candle. Let's contrast this with maybe a doji candle, right? Because that gives us a very good idea what is actually going on here. So this candle, we're looking at it. The high of this candle is here, the low of this candle is here. So we have the high being lower than the previous high and the low being higher than the previous low. So we are not seeing a breakout to the upside and we are not seeing a breakout to the downside. What does this mean? It's a very neutral candle, right? And you can see here we have a very mediocre setting. It's a 12 bullishness and we have a 21 bearishness. So not really strong. You can see since we are trading much below the highs, we are seeing more of a bearishness indicator here. The lows are pretty close to the low, so if this low would be below that, we would have even more bearishness. But since we're not really breaking higher and we are far away from the previous highs, we are more bearish than bullish. But overall, it's a very neutral setting because it's an inside candle and there's really not much going on. And you can do that for yourself. It's a very nice practice and it really forces you to look at the microstructure of price analysis. So this candle, what is this candle doing? We have a high that is much higher than the previous high and we have a low that is barely higher than the previous low, right? But overall a very strong bullish candle, and you can see we have a 43 bullishness and we have a, well, almost a 0 bearishness. And we can keep doing that forever. You can see here, last example, the high is lower than the previous high. Not much, it's very close, but the low is much lower than the previous low, right? So it's more bearish than bullish. And you can see, although the high part, this area, the high is not really that far away, that gives us here a little bit more bullishness in this DI candle and in the DI reading actually. So we have a lot of bearishness on the downside, not so much bearishness on the top side. That's why we do have more bearishness than bullishness, but the bullishness is not as low as what we have seen previously on a very strong bearish candle. For example, here, the high is much lower and the low is also much lower. And here you can see the bearishness is much higher than here and the bullishness is much lower because both the high and the low are really pushing down. So what happens here on an outside candle? This is quite interesting. Last example, I promise, and then we move on to the ADX. So here we have a candle where the high is higher and the low is lower. So that's a little bit of an interesting signal because it's neither bullish nor bearish. You could say, okay, it's a little bit more bullish because we have a green candle and also the close is really high. And that is what the DI is showing us. The DI is positive or above the bearishness at least, but it's very close. It's a very close call. And the only difference here that is happening is because the high is a little bit higher than the low, and also we have a bullish candle. But other than that, it's more of an equal balance, right? We are in a range. You can see the low is lower, the high is higher, and we are more or less trading sideways. Not a very strong impulse. And you can see afterwards the market drifted sideways. So yeah, that was a really interesting signal. Alright, so now we are starting to put things together, and as you can see when I open the settings, I have reactivated the ADX and I have also set it back to price line, and the inputs are back to default, which is 14 and 14. And there's one thing that traders do when they use the ADX, and there's a so-called trend filter value. So when the black line, the ADX line, is above 25, then traders consider to be the market in a trending market. And when the ADX is below 25, then traders consider to be in a range market without momentum. Sometimes you will also see values like 20 or 30. It really depends on the trader and also the market. So what we do is we use a line, a horizontal line graph, and we drop it to the charts. And then when you double click on it, we can very nicely just change the value to 25. And then you can see 25. It is what is here, and you can see the market or the ADX being above 25, we're in a trending market. So what does this actually mean? This is the signal when the DI plus and the DI minus line crossed, right? This is now the red line coming above the green line. So that's the first signal that you have here. This is when the DI line signal, okay, we have more bearishness than bullishness. And if we remember, what does it mean? We have the candle lows are lower than what we have seen previously, and also the highs are lower than the previous highs, which means that we are more bearish than bullish. And you can see shortly after, the ADX angle picked up, and that's a really important signal. The ADX going up shows you that the momentum is increasing, although technically we are not in a trending market until we break the 25 line. When the ADX is going up and the momentum is increasing, that's what this shows you. That's also quite interesting when the angle of the ADX is decreasing. So the ADX is decreasing, which means that the trend strength is also decreasing. Why is that? Because the DI lines are coming together. You can see the DI lines are now coming very close together, and this shows you when here the ADX is going down. And then here we have the DI lines crossing bullish. So here you can see this is now where the green comes above the red, and this is now marking the end of this downtrend. So really interesting sequence of signals. The first signal is the DI lines crossing. The second is the ADX going up. The third is then the ADX getting above 20 or 25. And then the trend is over once it recrosses and goes into the opposite direction. After you've been using the ADX for a while, you will probably also gravitate more towards using the DI plus and the DI minus lines, because they are more sensitive and you actually get way more information, since the ADX is just the average of the two. And it's also smooth, so a lot of noise is filtered out, but also a lot of important information is filtered out. That's why probably a lot of traders are going to use just the DI plus and minus. And let's just use that here for a very interesting example. So we're going to turn off the ADX and we're just going to focus on the two. And what I always like to do is look for transitions. So what this means is that now the market has been in a downtrend. The DI minus has been above the green line, the DI plus, and this corresponds here with the last trending move as well. And whenever I see that the trend has been going on for that long and the lines are coming together, I look for signs that maybe a trend is reversing or ending at least. We also probably have a little bit of a pattern here. We have a divergence and a double bottom. And what I would do in that case is see if the trend is really reversing. Do we really see that the green DI plus is crossing above the DI minus? And that is then maybe we could use it for a breakout, because what we have now is actually quite interesting, as I saw here, the range market pretty much. So we are in a range, we are flat, the two DI lines are flat. And let's see what happens. Okay, seems like they're about to cross, but even if they would cross now, I wouldn't be too interested. I would wait for the market to really get out of this range. And you can see technically the green is above the red, but it's a very weak signal. We don't want to do that. We want to wait for the lines to really okay, now it's very clear. We have a strong bullish candle. We have a very strong separation. Also, you can see this is actually quite an interesting signal that you will pick up after a while, is that there are periods where the DI lines are really very close together, really tight together, and then what you can do is look for a breakout. And if it coincides with a breakout out of a pattern, and also after a long trend, it makes even more sense, because there has been a strong downtrend. A lot of people made money, and the more people make money, the more people will take profits, and the more people take profits, the more it will release the pressure from the downside. And then also, when the market has been falling, it will become low, and it will become so low that it's more interesting for the buyers to buy. So it's not only about the candles and the ADX, it's also about the market dynamics. Does it make sense to see people buying the market here? Yes, it does, because taking profits in a bearish trend makes it also bullish. Factors are coming together. So technically here we could have our first long entry, right? And let's actually make this green so that it makes a little more sense. So here technically we would have our first bullish entry and see what happens. All right, we have a little bit of a retest, and we are not falling back into the range, and we are continuing. The two DI lines are still bullish over bearish, so that's okay. And it seems like we're taking off. Okay, we have our first retracement. The two lines are coming close together, which marks here our first consolidation. And keep in mind, this is nothing to really be worried about. The market is always going in those waves. It's always this back and forth, up and down, corrective wave and impulsive wave, as I've shown you so many times. Now we have our next breakout, it seems like. And it also coincides with a huge separation here in the DI plus and minus. So it seems like this could have been used for a re-entry. For example, we have a very deep retracement. So probably this may have kicked you out. And the bearish DI has crossed over the bullishness. So nothing works 100%, but that's all right. We just have to make sure that our winners are bigger than our losses. Let's keep going. And here you can see what do we have now. Seems like we have built another range. So here's the previous high, and here we have another high. So we want to see the market break out, and the breakout should come with a separation of the DI lines, right? Okay, which has happened here. We also have here the breakout buildup, and this is a flat top triangle. And you can see the lines are separating once again. So this would be considered trade entry number 3. And this is, by the way, if you want to backtest a strategy, this is also a good way actually. So we keep going and see, okay, what is going on. We have our retracement. The DI lines are coming together, but nothing to worry. Okay, a little bit more back and forth. Let's speed this up. We have another range. Let's see what is happening here. The DI lines are still favorably crossed. You could have maybe said, okay, here we could have traded that maybe. If you want to trade the breakout, fair enough. The market keeps going higher. The DI plus is well above the DI minus. Everything looks all right. And here we have another retracement. And especially if those retracements and sideways phases come with a very nice pattern, that makes even for a better one. So here you can see the DI plus is separating, it's pointing up, but we're not trading above the highs. So although they are separating, I really want to see the market actually break out. That's a very important signal. And you can see that's why we never just rely on the indicator alone. It really has to make sense in the context. And still in the range, very strong resistance. So we really want to make sure that we have everything coming together. And here you can see the last candle is where we broke out. And also that's where we have a huge separation. So technically this could have been another bullish entry. And you can see when we look back, this is the first one. This one would have failed. This one would have made a good trade again. And now let's see. It seems like, let's zoom back in. It looks all right. Very strong market, very weak. And now you can see we are crossing again. So probably you want to consider now taking an exit, maybe moving your stop loss, whatever you may be. Maybe you add moving average to trail your stop loss, whatever it may be. But when the two lines cross, especially in such a late trend, we have made some good trading decisions here. We have made money, especially wave 2 or wave 3 here in the middle. That's really where the bulk of the profits probably came from. And you can see it's an interesting example of how you could have used the ADX. Probably here would have been another one if you picked that up. In general, whenever you see, first of all, you're in a trending market, so the big picture trend is clearly up. Also, the two DI lines are coming together, and they're coming together when the market is in a pattern. Then you wait for the exit of the pattern and also the lines separating. So since the ADX is a trend indicator and a momentum indicator, it is often best used for trend trading, and we can very nicely also use it for breakout trading. So looking at this, we have a range. You can see the ADX is here below 25, and it's also more or less flat. So this technically signals a range, and when we look at the chart, you can see we are in a range. There have been some trending going on here previously, and that's also when the ADX was going up. But then you can see the ADX momentum went down, and that's here when the range started. So right now we are in a transition phase. We are a little bit more bullish than bearish. Why is that? Because when you zoom in, you can see the lines are actually started to separate. The bullish line is pointing up, and the DI minus is going down. Why is that? Because the bullishness is coming back to the market. You can see we have more highs that are higher than the previous highs, and we have the lows are also coming up, and the bearish candles are very weak. So we have a little bit more bullishness than bearishness, but the ADX line still being a little bit pointing up, but still below 25, which is the blue line. And we're also trading below the previous highs. So here seems to be a very strong resistance level, has held multiple times. So technically what would be better is to wait for the market to get back above this level and also wait for the ADX to cross it. And that's then how you could build and start building a trading strategy where the ADX is giving you a filter signal and keep you out of trades where there's no momentum and help you find trending markets. If, for example, you find this a little bit too slow, you could also change the settings to 10. But if you change it to a lower setting, I would maybe recommend to go to a little bit of a higher ADX because it will become more sensitive and you may run into more false signals. But let's see what happens here. So now we are trading above it. We're not yet above 25, but you can see the ADX angle is increasing. So this is technically not an entry yet, but now you can see now the market is in a trending market. We have broken out, we have a lot of bullish momentum, and now the market is signaling us a bullish momentum move. So this seems to be a good starting point for a bullish market. And then let's just keep going. We have our first retracement, and then the market keeps going higher, and you can see it's moving up and up and up. The lines are coming a little bit close together. You can see the bullishness is fading. The bullish DI line is going down and very flat. And you can see the bearish side is going up a little bit. So we have a little bit more bearish pressure in the market. When the bearish DI line is coming up, it shows us that the candles on the bearish side, the red candles are getting a little bit stronger and the bullish candles are weaker. And you can see that we have more bearish candles that are getting a little bit stronger and the bullish candles are very small and very weak. So that's a good first heads up. The lines are not crossing, the ADX is still flat, but it's well above 25. And now you can see it seems like the development is increasing. The bearish candles are getting larger, and this is confirmed by the DI minus getting up. And this is a very important signal here. And it's also how the DI lines can really help you pick up little nuances, because now we can see the bullish side is really losing momentum and the bearish side is really gaining momentum. So if you have been long previously, that may be a very good time to think about maybe taking profits, maybe taking partial profits, maybe moving your stop loss. We could use something like a moving average, the 50 or the 20, to trail your stop loss. And you can see if we turn on the 20, we would have broken it already. So this is how you can start building a system with the ADX being at the core. So you can see the market is now seems like entering a range market as the ADX is going down. So the ADX going down shows you that there's no more trend, and whereas previously the ADX was flat, which is already a sign that the market is more or less losing strength, now it shows you when the ADX is going down that we are kind of moving into the opposite direction as the bearishness is increasing and the bullishness is really coming down. So it shouldn't be too long until they cross. So you can see they're pretty much now on top of each other and the market is dead. So right now, this is a very good signal that, okay, you have been a trend trader, you have traded momentum. Now there's no more momentum. It's really time to think about maybe an exit. And you can see now the market is really dead. The ADX is below 25. The lines are crossing. And now it seems like the trend is over. So really nice study how the ADX can help you gain a good understanding of the markets, help you understand momentum, bullishness, bearishness. And very often I have seen that although traders sometimes have prejudices against an indicator, if we have things like the DI minus and the DI plus, it can really help us pick up the nuances about a price chart that we would otherwise often overlook.